Hello dear students, in final accounts we have seen the first part, trading account, how to prepare the trading account, Proforma, and one problem also we have seen, and the second part is profit and loss account. Why do we prepare profit and loss account? The main aim, the main purpose of preparing profit and loss account is to know the net profit or net loss of the organization. When we are running organization, we must know profit or loss. That will come to know through the profit and loss account. Rough idea I have given you in the introduction of the final accounts. Now we'll go in depth of this profit and loss account. Profit and loss account, the Proforma is given like this. Profit and loss account for the year ended so and so, 31st March or 31st December 2016, whatever may be the date is given. Profit and loss account for the year ended 31st March something. Generally you know that trading account and profit and loss account both will be preparing in one account only. Trading profit and loss account for the year ended. Anyway, I am showing you separately, that is why I have written here profit and loss account for the year ended so and so. Debit, credit, particulars amount, Proforma is same. Now what do we write it on the debit side? Debit side we write all the indirect expenses. Indirect expenses means the expenses which are related to the office level. At office level expenses, everything we call it as the indirect expenses. The list is very big, indirect expenses. But direct expenses which are related to the manufacturing, that is very less, that was very less. We have seen in the trading account. Now indirect expenses list is this. Now credit side, what do we write? Credit side always will start with a gross profit. Gross profit we got it from the trading account. Trading account, it was on the debit side. So that is transferring to the credit side. With this amount will start the profit and loss account. If at all, if you have a loss, gross loss, trading account credit side it will be gross loss. Credit side to debit side we would have written gross loss. Now generally we can expect gross profit, so I have written on the credit side gross profit. If it is gross loss, we'll write it on the debit side. With this we'll start. After gross profit, what do we write? Credit side all incomes. Anything received, that's an income. Like interest received, discount received, commission received, rent received, any other miscellaneous receipts, anything received income. So all these incomes comes on the credit side. In the problem, they won't give you all these incomes, any one or two you'll find. But remember that it's an income, so it comes on the credit side of the profit and loss account. This you must remember. So that's about credit side of profit and loss account. Now coming to the debit side. What do we write it on the debit side? Indirect expenses. What are indirect expenses? All these. First one is salaries. Salaries will be paid to the employees. Employees will be available in the office. So that is why salaries is always, it comes as indirect expenses in the profit and loss account debit side. Salaries, and also remember sometimes they'll give you salaries and wages. Wages is direct expenses. Now why do we write it here? No confusion. You see what is given first. Salaries and wages, indirect expenses. If this is wages and salaries, wages are in the first. So wages and salaries means it is direct expenses, like you have to identify. And the next one, rent rates and taxes. Company office will pay. Rent rates, taxes, office will pay. So that is why it is indirect expenses. Printing and stationery, office people only use this. So that is why it is indirect expenses. Postage and telegram, want to post anything, want to give a telegram, telephone bill, anything is indirect expenses. Office people will pay it. In the same way, telephone charges, office. Legal expenses, audit fee, through the office only will pay this amount. So that is why it is also indirect expenses. General expenses, petty expenses, this is also indirect expenses. Advertisement, who will give the advertisement? From the office. So it is indirect expenses. In the same way, travelers' salaries or commission. Travel agents we have appointed for them, we have to give the salary, we have to pay the commission. This is also indirect expenses. Bad debts. What is this bad debts means? Whenever we are selling goods on credit basis, Suppose say 50,000 goods I have sold on credit basis. 50,000 credit basis, not cash. Out of 50,000, people are paying it 30,000. I got 30,000. What about 20,000? Not going to get. That is bad debts. Whatever I am not going to get, that is called as bad debts. Bad debts means it's a loss. Out of 50,000 when I have sold, 30,000 only I am receiving. 20,000 I am not going to get. That's a loss. Loss will be in the debit side of profit and loss account. You know that. Okay. So bad debts is written on the debit side. Next, depreciation. When we purchase the assets, asset value will be decreasing year by year. 10 years back I have purchased asset, a machine. So that value right now it won't be that much. Every year some depreciation will be there. That's a loss. So that is why depreciation we write it on the debit side. Every year we calculate depreciation. There are different types of depreciation calculation methods like straight line depreciation method, diminishing balance method, and also annuity method, depreciation sinking fund method. Like different methods are there. As per that what we decide, as per that method we will be calculating the depreciation. Anyway, it's a loss. So debit side we are writing. Repairs and renewals. Company office people only they'll pay this repairs and renewals amount. And discount allowed. When we are allowing discount, say someone has to pay me 70,000 rupees. I told them you pay 69,000 rupees, I'll give you 1,000 rupees discount. You pay 69 only rather than 70,000. That 1,000 is discount allowed. When I am allowing discount, it's a loss. So debit side. Discount received, income. Credit side here. Discount received. Discount allowing, loss, debit side. In the same way, some more expenses, place is not there. So I am writing here carriage outwards. Carriage outwards means carriage is the transportation. Outwards, carriage outwards means once if it is reaching, the product is reaching to the office level, from office to until it reaches to the consumer, customer, there in between lot of transportation will be there. That transportation we call it as a carriage outwards. Who will pay? Office will pay. That is why carriage outwards we take it as the indirect expenses. If it is carriage inwards, direct expenses, trading account. Simply carriage, also direct expenses, trading account. Only carriage outwards, then only it comes as a indirect expenses. Carriage on sales also indirect expenses. Carriage on purchases, trading account, direct expenses. This difference you have to identify. Next, interest on capital, interest on loan. I have taken loan. On this I have to pay the interest. When I have to pay the interest, that's a expenses. So debit side of trading profit and loss account, it's a indirect expenses. Interest on capital. When company members or partners, someone is accumulating or someone is subscribing some capital, on this we have to pay the interest. Interest on capital, generally it will be 6% on the capital. So that's a loss for the company. They have to pay, company has to pay. So it's a indirect expenses. And also loss by fire or theft. If there is any loss by fire accident, 2 lakh loss, debit side. Theft, some goods are already theft by someone, then it's a loss, debit side. Another one is charity. For charity donations, alms, we are giving some amount to someone, that's a expenses. We are losing it, so that's on the debit side. Like all these items comes under indirect expenses. Please note down this table or take a screenshot. Proforma, you must be clear. If proforma is clear, then you can work out the problem without any hesitation. Please learn this proforma, identify what is direct expenses, what is indirect expenses. Observe it each and every transaction. Then you can remember this is direct, this is indirect. Like you can work out, you can remember. Now we'll take a small break, then after that we'll work out a problem related to the profit and loss account. Just I'll get back to you soon, shortly. One problem related to the profit and loss account. Some information is given to us. From the given information, prepare profit and loss account. The proforma is ready. Profit and loss account, debit, credit, particulars amount. Always remember, profit and loss account will start with the gross profit. Search the gross profit from the given information. Where is the gross profit here? It's here. So gross profit. We'll first write the gross profit on the credit side. By gross profit. It is 20,000. And debit side, what do you write? All the indirect expenses. Credit side, incomes. If any income is given. If nothing is given, you can ignore it. Debit side, all the indirect expenses. Gave you the list of indirect expenses. Identify it. Now we'll see each and every transaction. First one is salaries. Salaries is a indirect expenses. Rent is also indirect expenses. Loss by accident, loss, debit side. We write debit side indirect expenses and all losses. Credit side incomes, right? So loss by accident is a loss comes on the debit side. And bad debts is a loss. Why? I already explained. Bad debts is a loss. Interest on capital, it's expenses. So that is also comes on the debit side. Depreciation on machinery, loss. So it comes on the debit side. General expenses, debit side, indirect expenses. Discount allowed. Discount when we are allowing, it's a loss. So debit side. So everything comes on the debit side of the P&L account, because few transactions are indirect expenses, few transactions are loss. So anyway, it comes on the debit side. We'll write in each and every transaction here. 2 salaries, 2,300. Rent 5,000. Then loss by accident 1,500. Bad debts 1,800. Interest on capital 1,200. Then depreciation on machinery, it is also loss 1,000. Depreciation on machinery. To depreciation on machinery. Next, general expenses 2,800, that is also indirect expenses. General expenses. Discount allowed is a loss. Discount allowed. $200. Gross profit already transferred. So we have transferred everything. Now we have to close the profit and loss account. To close the profit and loss account, we'll see first which side is more. Roughly, if you see, everything is in thousands. This is 20,000. So credit side is more. We'll write 20,000 here. So same 20,000 we'll write it on the debit side also. Now from 20,000, if you deduct everything, you'll be getting net profit, because income is more, expenses are less. So we are getting net profit. If this is a 30,000, this is less, credit side is less, then we would have getting 10,000 as net loss. Now right now credit side is more, debit side is less. So we'll be getting difference of net profit. How much is the difference? We can use calculator in every exam. For inter first year onwards, all the students are allowed to take the calculator, so nothing to worry. You can use the calculator, and you need a practice also. So 20,000 minus 2,300 plus means 7,300. 7,300 minus 1,500 plus 1,800. This is 3,000. 3,000, 4,500, 5,500. 5,500. And next this is 3,000. Comes to 4,200. Am I clear? Let me explain. First you can take a screenshot or note down this problem. Let me explain. Simple, nothing to worry. Profit and loss account. Just see the items, what is given information. You have to identify what is direct expense, what is indirect expenses. Now we have identified salaries, rent, loss by accident, bad debts, interest on capital, depreciation, machinery, general expenses, discount allowed, everything is indirect only. So we have written on the debit side. Credit side, what do we have? Only gross profit. The difference, credit side is more 20,000. 20,000 minus all these transactions, we got 4,200 as net profit. So this net profit will be transferring to the balance sheet. This is about simple profit and loss account. In the coming classes, we'll go in depth. First of all, for final accounts, you need to have a basic knowledge very strong. Then you can work out the problems easily. In the next class, we'll see one problem related to the trading and profit and loss account together. It will be easy for you to understand. Then after that, we'll go to the balance sheet and how to work out balance sheet, what is the Proforma of balance sheet. Then we'll go to the direct one problem which is related to both three together, trading, profit and loss account and balance sheet together. So that we'll do later. Anyway, hope you are understanding it. Please make a notes. Follow any textbook. I would prefer Jain and Narang. Jain and Narang Financial Accounting. It's Kalyani Publications. Or otherwise you can go R.L. Gupta also. Or as per your prescribed textbook, as per the syllabus also it's okay. But concept should be clear. If it is clear, take out your textbook and work out and see the problems. So please go to the description box or playlist of the channel to find more subjects, to find more topics also. So stay connected with me, refer this channel to someone and help them to study well. So take care of your career. Good luck.